Hello, everyone. Good evening, good morning, have a good day for everyone. How's it going?
How you doing,
I'm
sir?
fine.
Good.
What's up, guys?
Yeah, awesome. So tonight we are hosting Adli from Usual Money. How's it going, Adli?
Pretty well. Focus on delivering new integration, I would say. More liquidity, more TVL.
Awesome.
We stay focused. It's a 4 months period when we need to prove and achieve maximum. So
Awesome.
let's
Can't wait to hear more about it.
Yeah.
How's it going, CryptoVestor?
Doing well, sir. How you doing?
I'm very good.
Good.
Pretty tired. I've done
Yeah.
too much stuff today, but
Not going on, right?
happy to be here with you guys.
Always happy to talk stable coins, right?
Sorry?
Always happy to talk stable coins.
Yeah, definitely. And that's an interesting project we hosted tonight, so I'm very happy to have you, Adli. How about you, DeFi Advisor? How's it going?
I'm good. How are you guys? Nice to be on. Nice to meet you, Adil.
Nice to meet you.
Excited to know about Usual Money and what you guys have been cooking up. I know whenever Cyril and CryptoVestor want to host a space, it's usually because they're cooking something.
We try to make a lot of cooking,
Exactly. That's what the French do. We cook.
Yeah.
I know.
You cook well.
Wasn't
Not only
for
that,
us,
you cook
they
well.
could do the space in French.
Let's have a Michelin star on our DeFi protocol.
Yeah, let's do that. Definitely.
All right. There has to be some kind of product at some point, some kind of I don't know, a crypto product that opens up like all these kinds of famous restaurants for you or whatever.
Yeah, you recognize the French gastronomy, and it could be.
Yeah, come on.
Oh, last time they tried to buy the Constitution, right? So now we're just going to open up French restaurants.
Why not?
Good.
All right. So there's already almost 300 people watching this space. That's awesome.
Wow, nice.
Awesome.
No pressure, Adli. No pressure.
No pressure at all.
Mostly bots, Adil. Mostly bots. No worries.
Yeah.
Let's make new records for this broadcast.
Yeah, let's get up to 1,000.
Yeah, well, we do 1,000 quite often.
We do. We often get there, don't we?
Yeah, pretty often. Almost every time.
Yep.
So maybe we can start with a quick introduction. Adli, can you maybe introduce yourself quickly before introducing Usual Protocol?
Yeah.
Both our communities are watching tonight, so some from your side may not know FX Protocol, and some from our side may not know Usual. Yeah. So maybe you can start with introducing yourself and Usual quickly.
Yeah, so pretty quickly on myself because it's not the most interesting. I've been in crypto since 11 years. I have very different background from I would say average crypto guy because I'm come from classic studies, Latin and Greek, language science, computer science applied to language science, and I made also other stuff like the war school as a civilian auditor. So pretty curious by definition, I would say, and that's how I ended up in crypto. And fully dedicated, I would say, most of my time to crypto since 11 years. For 5 years of non-profit activities, building the community in France, like doing some pedagogy, speaking about Bitcoin and what is Bitcoin and how to understand Bitcoin, wrote books, stuff like that. And since 6-7 years, I work in crypto full time, and I've been through different ventures, consulting firm, advising different company, also co-found an incubator. I also run a fund, and right now I'm co-founder of Usual, and I'm mostly focused on like design, so that's why I'm DO, like design executive officer. So my goal is to find a solution with design-driven logic, and the company is really design-driven in every shape, I would say, on the tokenomics, on the goal we want to achieve in terms of political goal, I would say, but also on all the aesthetics and product where we try to be very, very clean and sharp. And so, yeah, my main mission and focus are on product, tokenomics, strategy, and BD.
Were you a Bitcoin maxi when you started?
Yeah, I was a big for the French and in the French community, I was considered as a maximalist during a long time, even if I were always curious. So I was not like
Yeah.
a radical maximalist.
So
But
what,
yeah,
what made you switch to Ethereum? Like what was the moment that
I
that
think
you finally said,
clearly that
okay, wait a minute, this is different?
I think it's a DeFi clearly. When we started to have real extra value on Ethereum, like Uniswap or stuff like that, you know. Before ICO period, I was giga skeptic, to be honest.
Yeah.
ICO period for me was ton of bullshit. There was only tokens, ERC20
I
with
remember, yeah.
no usage. You had like big fundraise for new L1, and the L1 was not delivered, but people were trading the token. So it was only like it was I like to say that it's like it was a Lamborghini machine in certain way, where you can print shitcoin to infinity and buy Lambo. But yeah, the ICO period was not something I think that make Ethereum great. What had made Ethereum great was after, for me, because ICO was a use case and a true use case, and I think it's at the
Like
same time. Sorry.
When you start realizing you can earn yield, you know, that's when I started realizing.
It's not the yield; it's really more the usage, like doing a swap, an Uniswap.
Yeah,
like a wonderful experience after 7 years of just transacting in crypto, you know. I think that was for me the revelation. My first swap on Uniswap, and and basically the whole DeFi. It's very powerful to when the first time you make an exchange without any counterparty. Because Ether Delta, etc., was a little bit different at that time, and even the UX was totally horrible. I also remember the time when it was missed to explore a little bit the dApp, and yeah, I was always curious, but I didn't consider Ethereum serious, I would say, before 2018, 19, and I was really more into Bitcoin. And I know I think it's an error to ignore Ethereum, and I think that if Ethereum was still in proof of work with the new monetary policy of EAP 1559, it will even be maybe a better store of value than Bitcoin. But my problem is proof of stake, but that's another debate.
Let's not start that debate tonight. We have other stuff to discuss. All right.
And yeah, maybe I can say 2 words about usual.
Go ahead. I mean, we kind of want to learn a little bit about it.
Yeah.
So.
No, on usual. So we started that with Pierre Persson, who are an ex-congressman in France, was also the advisor of the president, and he was like the crypto congressman of France, like defending a little bit the crypto space against all the other congressmen. So he drafted the framework and stuff like that. And at the end of this mandate, he started thinking about doing something else. And we just met, and we were knowing each other because I was chairman of a non-profit organization for crypto in France, and he was congressman. So I was like audits to say what the community think about crypto, what will be the good regulation, etc. And so we knew each other and start discussing about stablecoin. And it was 2022, and he had a project of stablecoin. For me, stablecoin was the boring stuff. Like fiat stablecoin was the most boring stuff. So I was like, oh yeah, really? You want to do that? It's strange. There is so many cool stuff in crypto. And he explained me, because I was so focused on the crypto maximalism that he didn't see the rate and all the logic of business model of Tether and Circle and Issuer. Sure. And I was like, oh, it's totally crazy. They will make billions on our deposit, basically. So maybe it's time to build something that is truly decentralized and that give, I would say, the same purpose, because you have a lot of alternatives, but you don't have something that is really replicating Tether and Circle on chain. And that's what we are trying to do. And all the difficulty was how you distribute the ownership of the issuer. And that's where we have work a lot in terms of tokenomics. And yeah, mostly I will say we are rebuilding Tether and Circle on chain, and the goal is to have an open protocol, decentralized, and neutral and agnostic, because there is also a lot of problematic of, for example, having a Tether very close to Bitfinex, having a Circle very close to Coinbase, and we have seen it with BUSD that was clearly shut down because of Binance, because at the end it was Paxos in white label. So yeah, the main problematic we saw is that there is a misalignment between issuer and user, and there is like a problem of neutrality in the issuer, and that the fiat back model was the more efficient in our vision. And when I say fiat back, I say fiat and cash equivalent. And basically, we are trying to build a decentralized circle. Yeah.
Yeah, so that's kind of what I.
That's so cool, man.
Yeah,
That's
that's
so
really
cool.
cool. I mean, the way I understand it, I mean, you said a little bit, but building like a decentralized tether, and I think to really explain it better, where's the source of the yield coming from? Where are the bonds or the bonds that you guys are investing in? Like, what is that? What type of a bond is that?
Right now, what we have as a collateral, what the protocol has as a collateral, is a USYC. So USYC is a tokenized asset issued by Ashnote. Ashnote is backed by big institutional, so it's not like a little company with no money, etc. So that's pretty reassuring. To choose Ashnote, we have made an audit of all tokenizer to choose the right one. So we have made an audit about Ondo, backed, Ashnote, etc., etc. We think that Ashnote was better for several reasons. At the same time, their legal setup, that is a dual model where they can have US and non-US. So they are more open to capital in certain way, because
are they KYC?
Yeah, it's KYB, etc.
KYC, so people investing are
totally.
Okay, and they're tokenizing these bonds on Ethereum.
They don't tokenize the bonds; they tokenize the money market fund. And this money market fund invests only in reverse repo. So it's 1-2 days of maturity maximum. So this was also a good argument for us, because we really think that it's good to start with very, very short maturity. And so what back usual is tokenize money market fund shares issued by Ashnote, that is USYC. And basically it's accruing the yield that is defined by the Fed rate.
Yeah, so short-term maturity, so it's as close to cash as possible.
And US, we can have maybe a little bit longer maturity. Back money by 3 months bonds is okay also. It's just that on all aspects, it was the best setup, and also on the velocity, because we wanted to have a very good velocity in terms of minting adoption for people, and they have good liquidity buffer and good availability on that. But in the future, clearly, our goal is to unify, I would say, all this liquidity. So we start with Ashnote, but it will not be the only one maybe in the future.
Yeah, this is a very cool project, because, I mean, you guys really are the decentralized version of Tether. And you're literally taking the yields, right, from the bonds, and you're giving it back to the token holder, right?
Yeah.
Back to
the protocol will not distribute day one. So it will be only accruing in the treasury. And people will have ownership with the DAO token. And if they want one day to set a distribution, a burn, a buyback and burn, or so on, they will be able to do it. But we really want to play the decentralized play, and we will not by ourselves activate any distribution of revenue or stuff like that. Really, the goal is to people get the ownership of all that. There will be like transition phase, like in every decentralized project, but we really care about the decentralization. That's why 90% of the supply will be given to all the people that participate in a liquidity pool, in locking USD0 into USD0++, that is locking liquidity, so future revenue. But also we want to redistribute to ecosystem. So for example, to have a small allocation that will go to all the ecosystem parties that integrate us at pro rata of how many assets they have. So for example, if there is half of our asset in Uniswap in liquidity. We will send to the treasury of Uniswap a small amount of token. So the goal is really to have all the third party and to have all the service provider that are like participating and incentivized to make the protocol great and working, and that had ownership of that. And the great stuff, that's how we see the world. Sorry, if I talk too much, you stop me.
No, you're doing great, man.
Super interesting.
But how we see it is like the more we have that logic of spreading the ownership, the more it will be neutral and resilient. And so our like dream is to have exchange protocols, DAO, community, individual, etc., all having the usual pie, and in a certain way having an equilibrium in the power that nobody has ultra strong power, and that everybody must agree on what is the best decision for everybody. So you see in that little sum up, I will say that we have clearly a vision, like Bitcoin was designed to be resilient and censorship resistant. We try to build something like that. We have that very little link with the real world, I will say, because at the end of the day, reverse repo or T-bill are something that are only at the moment on old infrastructure, and so we have to make it compatible with our infrastructure, but still it's a little bit centralized, and we will work also on that deconcentration, I would say, of the collateral the more we can. But the goal is really to be resilient and to have a non-zero sum game with all the participants.
That's awesome. And I also we probably should mention too that you guys are very integrated into the Curve ecosystem, and you have quite a lot of pretty high profile backers in your project. You have some, I know that some of the guys from CVX5 also invested in the project, some of the Curve guys as well.
Yes, there is a founder from Convex, from Aladdin, from Gearbox, from Balancer, from Curve. But basically, I would say
everybody
small majority of the DeFi roster. But the goal was always the same, to align. Our goal is really to align interest, because the main problem in the fiat-backed stablecoin environment is the misalignment. It's clearly the misalignment between all the parties, because as an exchange, you don't have the same goal on those stablecoin than the user, than the broker will have, etc., etc. And so what we want to do is to have really a model that suits everybody. And we think that Maker has done something like that is great, but we think that the CDP model cannot scale as the backed model and reserve model. And that's why we have adopted this model. And we think that the most simplest way of having a stablecoin, a fiat stablecoin, is to back it by the very purest, I would say, collateral you can have. So like state debts, and state debts is what TradFi use as a dollar, because you don't want to have sleeping dollars.
It's the closest thing to a real world asset that's on chain, that is liquid.
And permissionless.
That's really cool. Right? I mean, that's the whole point, right? Decentralized, on chain, liquid, and real world assets. So you have the scalability.
Yeah, totally. That's the main point, because we really like Itina model, we really like FX protocol model, etc. But we think as alternative for people that don't want to touch fiat backed in certain way. And I can understand that some people want to be 100% censorship resistant in certain way, 100%, and having a pure crypto stablecoin. But in terms of scalability, in terms of usage, and in terms of utility, we think that the most that I would say the model has been proven. Like Circle and Tether are not there only because they are centralized. They are also there because the model of having reserve asset and one and no liquidation to manage, and no interest to manage, and no strange stuff to do for a normie to access the stablecoin is the more easiest way to spread it and to scale at huge amount.
Yeah, it makes a lot of sense. I mean, it's not a matter of which model is the best or whatever. I think it's just obviously with FX protocol we made different choices. We chose the no reward asset approach and to have a 100% on-chain decentralized stablecoin, which has a perfect peg.
The purist approach.
Yeah, exactly, and inherent yield and so on. But the two models can definitely coexist and will coexist. And actually, they coexist because we have a pretty nice pool to build together. But we'll discuss that a little later. But yeah, that's very interesting. The way you chose to go reward asset for obvious scalability reasons, and the choice you made of making like just giving back to the community what Circle and Tether just kept for their 15 employees. It's pretty awesome.
Yeah, and so basically owning the usual token is like owning a share of, future decentralized Tether. That's pretty cool.
Yeah, that the logic. That the logic.
Yeah, that's very cool.
So when did you exactly launch? And can you just, because I know the numbers are pretty crazy, so can you just say when you launch and what's the TVA right now? I shown a couple of, I shared the screen a couple of minutes ago, but so can you just give the numbers?
We launched public on the 10, if I don't made a mistake. So two weeks ago, ish. And we have 120, I think, more than 120 million of TVA right now. We had started a little bit before, to be honest.
123
with a private, I would say private access that for our backers that allow us also to test a little bit the protocol in whitelist version, etc. 1 month before, and we launch the full public mode and Pills campaign 2 weeks ago. Yeah.
Okay, I see there on the UI that a code is required to access the DApp. Can you share a code here, or is it how does it work?
I guess you may prefer to share your code, because like all code are linked to somebody, so there is like an organic referral for everybody. So I can give you a code, and you can generate it for the FXDAO, for example.
Yeah, we should
you host the podcast. Yeah, or I can give my referral, but
yeah, feel free to do it.
It might be good for you.
So that the viewers can interact quickly with you. You can share your code.
Yeah,
I had a question.
I would send a Genesis one. So if somebody in the live can generate one for FX, you can share your own code. Yeah, and people can share the code also.
Yeah, we should have one for ATM DeFi.
I have a question. Do you guys? I assume you don't, but do you guys have a blacklist?
We have. No, we have a blacklist. Yeah, we have a blacklist because we, you always have to find a trade-off. And I think that
you want to be compliant with different jurisdictions and with
I would say that we search for the minimum viable compliance in certain way, and so that because we want to be decentralized, we want to be the more censorship resistant and the more neutral we can, but at the same time we don't want to we want usual to be able to grow, to be able to spread in certain way. And so I think that there is some trade-offs that are
that makes sense.
beneficial for the protocol, even if it's delayed a little bit of total freedom, I would say, without any censor, etc. So that that's more a mid-term bet and play, because we think that it's important to find that minimum viable compliance area.
Yeah, no, it's a good point, and it's important for people to know.
Yeah. And it's also important. Another just a little point. I think it's also important because what I like in DeFi is when like some protocol freeze hackers. It's good that we can act as protocol and as decentralized community against hackers.
It's not only governments. It's within DeFi. You can help with these types of vulnerabilities and things.
By the way,
Go ahead,
guys,
DeFi Advisor, you had a question.
speaking of hacks, no, I just wanted to mention that I'm seeing on
Oh.
X that DYDX was seems to be compromised.
Yeah, I just saw your message.
So just
I saw that
for any viewer that uses DYDX, beware right now, and just to make sure that people know. You can see they posted a message on their X account.
Okay. No,
And yeah, you actually make a good point there, Adli, about the fact that the blacklist option, of course, it has its downside for the from the immutability side of things for the user, but it also has its benefits in some cases. So it's a more complex game than it seems maybe in first.
You always have the social layer and the, I would say, technical layer.
Yeah,
and also is good learning on that.
Yeah, and different users will prefer different things with different allocation. It's the natural way. It's the real way that things are going to happen. It's not a one size fits all. On 99% of the time, at least.
Yeah.
Maybe you can do a quick introduction of what FX is, because clearly there are maybe some members of usual communities that don't know what FX is.
Yeah, definitely. Yeah,
you got the best guys for it here with
go ahead, Cyril, and I'll fill in.
You got the top of the top to explain this kind of stuff.
Sure. Okay, I'll try to make it simple. So basically, FX protocol is a new decentralized stablecoin protocol. We enable two kinds of assets. So the first kind is decentralized stablecoins that are 100% on-chain and fully backed by decentralized assets, and that have perfect peg by design because they can be minted and redeemed at Oracle price at all time. So they're perfectly pegged to one, basically. And okay, like that. No, that's not what I wanted to do. Okay, never mind. I don't know how to do it, DeFi Advisor.
You just drag it. You can drag your icon and.
Oh yeah, I didn't know. Okay,
that's
fine. Thank you. All right. So basically, we enable perfectly decentralized stablecoin that have a perfect peg, and that earn a real yield. So basically, FXUSD, which is the stablecoin we pair with USD0, is backed by Lido staked ETH and a little bit of Rax ETH. And you can either pair it with a USD0 and earn yield, or you can stake it into what we call stability pool. And when you do so, you will earn the staking yield of Lido, plus FXN emissions. So that gives you a pretty interesting yield. I will share a screen after, because I can do both, like speaking and sharing the screen at the same time. But I'll do it. So that's the
none of us has that much coordination. It's okay, Cyril.
Yeah, I imagine. So the first kind is that perfectly stable, decentralized stable coins, and the second kind of asset we enable are liquidation-free leverage tokens. So basically, you can get XETH, for instance, which will give you up to 4.3x leverage on ETH without facing individual liquidations nor paying any funding fee. So you can simply hold it on the long term, and you get leverage without facing liquidation, and you don't have to pay for holding the leverage. You don't have to manage any debt position. It's very straightforward. You simply go to FX, you get your leverage token, you hold it, and when you want to take profit, you just sell it, redeem it using the protocol. It's very easy. Do you want to add something, CryptoVestor, or so that I can share the screen?
It's also as liquid as Lido staked ETH. So in our case, we're taking the liquidity from the on-chain liquidity that's pre-existing. So we are also very, very liquid, but we're 100% DeFi, so 100% decentralized. We're not using any real world assets in this case.
Yeah.
And another thing is we also, the X tokens or the leverage tokens, when they are purchased, the staked portion of those tokens, part of that goes to the stability pool So they're the stablecoin holders are earning that yield. So they get an amplified Ethereum yield. So it's completely decentralized. It's one way that a stablecoin can earn higher than normal staking Ethereum yields. We also have one for WBTC. So we have a stablecoin that's backed by Bitcoin. We have RUSD, which is based on restaking restaked ETH by EtherFi. And we also just launched recently, which actually, if you take a look at it, Cyril, we just jumped up on CVX USD to 1.8 million. And that's caused some buy pressure on CVX. So we actually created a CVX USD, which is based on the CVX token. So imagine CVX, but stable CVX that's earning the yield from the staked CVX. And then on the flip side, you have the X token, XCVX, that gives you up to 3x leverage on the CVX token. So FX has a really interesting way of creating with this invariant formula, creating stable coins out and leverage products out of yield-bearing assets.
Yeah,
and
exactly.
so.
I should probably have started with this. Is we basically take any yield-bearing asset and split it into either a perfectly stable, decentralized stablecoin or a leverage token.
Right.
And the way it works is very simple. You can just go to the UI here, and if you, let's say you want FX USD to pair with the USD 0, for instance, you just go there, and you can swap from any centralized stablecoin or any asset. Let's say you want to swap from USDC to FX USD, and the UI will let you mint or buy the market and calculate the best route to get it. And you can choose whether you want to go through CowSwap or FX directly, or 1inch or Curve or whatever, and then you get your FX USD at the best rate, like that.
And that liquidity is coming from it's coming on chain from the deep Lido ETH curve pool. So
yeah, not only the curve pool, every pool's on chain.
All pools.
Yeah, it will look at all the. So basically, FX USD is minted from Lido stake ETH. So when you pledge USDC, it will buy Lido stake ETH at the best rate on the market and mint FX USD if needed. But for instance, when I made the example here, it's very likely that it will just buy it at the market, because you see that you
do a larger number there. Do like 1 million or something. So
you get when you do that, you get a little more than 50 grand using CowSwap, because it will probably buy it at the market. Right. But yeah, you can definitely go for a higher number, and you will get a pretty good rate, because yeah, that's it.
Yeah. And so another thing we should mention too, since USDO is pairing with FXUSD,
yeah,
USDO is technically paired by pairing with FXUSD. It's automatically liquid with staked Lido ETH.
Yeah,
so
exactly.
That's what's really cool about it. Is like there's no we don't have to maintain or bribe a curve pool. It's automatically taking from the on-chain liquidity.
Exactly.
Yeah.
And
very different approaches, very novel approaches. One using real-world assets and one completely decentralized. But you can see how, creating a curve pool, we can work together. It's really cool.
And speaking of curve pool, going to the earn section, you will find the all our different yield strategies, but there is the USD 0 pool somewhere. Let me know if you see it. Yeah, there it is. There it is. So basically what you guys can do is just head over to the curve pool here and pledge liquidity. And when you do so, you can earn FXN rewards. FXN is our governance token. And so you can just add liquidity to this pool on Curve. So you can add both. The best way is to add both USD 0 and FX USD with the same distribution, and then you can stake it here on FX Protocol. And
I think the best interest of people right now, if they enter, is to one side to the equilibrium, because they will have little bonus of slippage.
Yeah, a little bonus coming with USD 0 at the moment. Yeah, there's a little more FX USD. You're right. Yeah, and then once done, you can stake it on FX here. Stake your LP token on FX, and you will earn between 51 and 128% APR. And pretty soon there's going to be a Convex integration as well. I'm not sure it's listed yet on Convex, but it will be in the coming days, I believe.
Great.
That's
So
like
you
stablecoin.
will be able to earn something in between these two yields. You can also boost your yield using locked FXN on FX directly. So that's basically it. Feel free to take a look at this section here. And I've prepared a QR code for you guys if you want to just flash it.
Nice.
That is professional, you know.
You see, Cyril, he's a pro. He's a producer.
He's a pro at everything.
Oh, it's
He's a
glowing.
pro at everything. And then he tells me that he doesn't know how to drag it like that. But other than that, he knows how to do like 10 streaming that I don't know how to do, but I'm a streamer, you know.
I just learned about the dragging stuff, but I didn't. But yeah,
you're next level with all these pop-ups and like intro. You even make a great thumbnail, by the way. It was a very good thumbnail for today's episode.
Thank you. You can thank Canva for it because I basically didn't do anything. But Canva
but still, someone had to press something on the website.
And I've got good news, guy. There's 1,054 person watching this space. So thanks you for watching, and feel free to share so that we can reach our goal to. We want to cross 2,000 tonight. So feel free to share and retweet this broadcast.
And I call on the usual raccoon to put their code under the live stream for people.
Yeah, put your codes. Feel free to. And there's also, you know, that you can. There's the ref code, the usual ref code, but there's also the FX points. So LPs to the pool may want to also add an FX referral code to their account on FX protocol to earn extra rewards as well on that side. So you can earn extra rewards by providing liquidity to any of our LPs or stability pools, having a ref code added to your account. But you can also earn rewards by just sharing your ref code as well. So,
and those are redeemable for FXN. Should say that, yeah.
And all our points are redeemable for real money every month. So if you guys consider LPing to the FX USD 0 pool, a good place to add both ref codes on both sides. Just extra rewards, guys.
Yeah, and Adli, you usual has pills, right?
Yeah.
You want to bring it up or
the purple pills? You know, they are made. If you make a points program, at least we try to make it a little bit
interesting.
More funny. and we have made all the language around that, etc. So on the DApp, you go into the drugstore to see how many pills you have won. It's also a small reference because it's the purple pills, and as I say, we always have something politics in our goals. So it's also the times to liberating, I would say, from whole fiat stablecoins that are misaligned. And take your pills, guys, every day. Take your meds.
Can I ask when you guys are going to launch your token? When is the TGE for usual?
Should be 10 November. It's always risky to say precise date, but that's how we design the stuff, like the program.
So very soon. Couple months.
Yeah.
And I assume the pills are going to be redeemable for some of these tokens eventually, right?
Absolutely. It will be an airdrop. We are totally transparent on it.
Nice.
And Adli, what will be some of the utility of the token and how it's going to be called? Do you guys already know?
The token will be usual, simply. We don't make a smaller ticker because we think it's good like that, and it's all norm we can avoid if we want. And and the utility of the token will be for sure the governance at start, because as I say, the set of smart contract will be owned by all the people that have the token. So the treasury will be in certain way co-owned by all the people that had the tokens, all the yield generated by collateral, etc. So first is that, so you have the power to choose the distribution or not in the future, etc. Second utility will be clearly on all the, we'll have some staking for sure, and we really want to implement Gauge. I don't know if we will be able to do that for the V1. We'll try, but I think it will be a little bit after our launch. And we have many other idea in mind, like having some, I would say, weighted reward is with your USD 0++ bonds, depending, for example, the where are located your usual and stuff like that. So the goal is really to maximize the value of the token, the utility value, I would say the premium of utility, because clearly that's what make we think a token strong. For example, if you look at the CRV token, I haven't checked like very recently, but if you look at the CRV token right now, CRV token has always have a very strong P, because the real yield in certain way of the CRV is not only the yield you have by making it vote escrow and having some yield of the curve DAO, but it's from the bribing, and this is way higher. That's why the P of CRV is way higher. The P is price earning, sorry. So it's a ratio between how many protocol earn and how the protocol is evaluated. And so it's very important for us to have that kind of stuff, because the usual will be the base reward asset in the system. And so that's what we call risk-free ownership, because that's what we give. It's not a risk-free yield in certain ways, it's a risk-free ownership. And so the more value the token has, the more the flywheel will start, and we can absorb like that a lot of liquidity and TVL.
Can I ask one question? I think I heard you say it, but I want to make sure I understood. Did you say that there would be VE tokenomics down the road, like in V2?
Yeah, we have some. We have designed some stuff a little bit different than the tokenomics, because we think that the time-based lock is not the right metrics. We want to have an approach that is maybe more price lock. It will not be on day one, because it's kind of a huge part to develop and to be sure that everything work well. But in terms of economic modeling and all what we have.
That's interesting. So based on a certain price that the token reaches, it would unlock or something like that?
Yeah, it will not unlock, but basically people can buy it and rebuy it locked. So the goal is to really have two different markets. Ones with assets that are locked and that people can buy at a certain price, but they buy it locked. And if they want to redeem in certain ways the non-locked version, they will pay a little fees to the DAO. So it's a way to align everybody and to have constant locking while not having liquid locker and stuff like that, or to make DAOs that accumulate a lot of usual to earn right and have Gauge, etc. Will have to actively manage in certain way, because price is less predictable than time. And that's also another important stuff to reduce the layerization effect of CRV, with CRV, convex, balancer.
This is a novel VE locking mechanism. This is really cool.
Yeah, we have worked on that. I cannot announce when it will be released, but on paper, for us, it makes a little bit more sense and a little bit more efficiency, because you are still liquid in your lock position, and it's also allow us to distribute token in lock version, because you have an exit liquidity that is a spread of this asymmetric market. But it's for the moment it's on paper in our internal paper and modelization. Maybe it will no go out, and we'll have a vote escrow also. But clearly we think that we can upgrade a little bit, and we clearly are tokenomics lovers and game theory lovers, so we try to always fine-tune all the mechanics to have the more align and balance system where you are totally sure that there is no bad move that will not benefit the collective that stay in a certain way. That's the goal, you know. What you want by designing a protocol is to be sure that every interaction has benefit to the people that capitalize or stay in, and that's what we try to do.
Guys, I don't mean to interrupt, but I think I'm getting some word that there's been a hack with Spectra Finance.
Wow.
I'm trying to confirm it though.
Really?
Yeah, I'm looking.
All right.
So, you know, if you guys are on Spectra, please be careful.
Wow.
I'm just confirming it.
They have published on their Twitter?
We have an integration with them, yeah.
We have an integration with them. We should look into it pretty quickly and communicate.
Someone just mentioned it in one of my Discord channels, but I don't know. I don't have confirmation from
yes, they haven't tweeted about that right now. I checked.
They haven't tweeted yet, no. But anyway, no, very interesting, Adli. You know, I think that this is one of those projects that, you know, this could be really huge. One of the next major stablecoins, probably in you know, in all of DeFi.
Somebody say Mitch confirm. So maybe
Mitch confirmed. Oh, okay, so Mitch confirmed it. So yeah, everybody be careful out there with Spectra Finance. I don't know what type of hack, or I don't know what it means, but we'll have to look into it. But I figured since we're on a stream, we probably should mention it.
Yeah, definitely. Okay, so we have a couple of minutes to wrap up. It's been very interesting, and it's definitely something to follow. I can't wait to see how the tokenomics are going to play.
Yeah.
Me too. Sorry?
Me too.
I think it's probably a question some potential LPs may ask themselves is, and for both our projects, basically, because it's two different stablecoins, USD peg stablecoins, is how well these stables can handle the peg, and what's the risk of LPing into our joint pool, for instance. So what's the risk of LPing? We can probably answer for the FXUSD part. What's the risk of LPing in a USD zero pool?
On USD zero, you know, we are really safe about it and the peg, because everybody that is KYB at Hashnode can make a redemption at any moment. So the arbitrage is totally, I would say, open to everybody. We also have some people that monitor that to be sure that it's peg. But clearly we have a strong peg simply because it's easily arbitrageable, you know. And for the moment, it worked quite well. We have a quite strong peg. Another measure we have is that when people try to mint on our DApp the stablecoin or the bonds, and that there is a depeg, they are rerouted to the secondary market. So we always have a smart routing if there is small depeg of more than the fees in certain ways that you pay on Curve, and if there is more than that, we reroute you to the primary market, to the secondary market. Sorry.
Yeah, that makes sense. We do exactly the same.
We never print new token if there is no real demand in front in the secondary market.
All right, sounds good. And CryptoVestor, do you want maybe to answer the same question regarding to FXUSD?
I'm sorry, I didn't catch your question.
Yeah, it's fine. I was just pointing out to the people watching what's the risk of LPing into the FXUSD USD zero pool, and how can users be sure of these two assets to keep the peg. And from the FXUSD side, it's pretty simple as well. It's that you can always redeem it for its value in wrap state ETH or Frax ETH. So by doing so, you make sure that
FXUSD too is that the X token provides the buffer, right? So it absorbs all of the volatility up until there's 100% collateralization ratio. Then we have 120% when the system goes into stability mode. So you have you'd have to see a major drop in Ethereum's price to really start worrying about the peg for FXUSD.
Yeah, exactly. But in the meantime, if there's no, like when we say a major event would be like maybe like 60% in a
day.
couple of minutes or something like that.
Something like that.
But in the meantime, you can always redeem your FXUSD for their exact value in wrap stake ETH or Frax ETH. So that makes FX the FX protocol is the primary liquidity source for FXUSD, and just as the same as you said, Adli, with USD0, if it's the secondary liquidity is under peg, when you go to the UI, it will buy the market to repeg it before minting new FXUSD. So that's how FXUSD is very well pegged as well. So yeah, the peg risk of our pool is, in my opinion, pretty low. So now you know what you've got to do, guys. No financial advice, of course.
Yeah.
But just take a look at this pretty interesting yields.
And remember, these are two stable coins. I mean, 129%. I mean, this is crazy. The opportunities between usual and FXUSD and all of the FX stable coins or the pairings that we have. I mean, there's super high yields there, relatively very safe. So yeah, everybody should take a look at that.
And thank you for watching, guys.
Yeah, definitely. It's 1,210 people watching this broadcast. Wow. If you guys have questions, it's probably the time now to ask questions. We're watching the chat on both X and YouTube. Feel free to ask any questions. Do you guys want to add something before we wrap up this broadcast?
Yeah, I would say stay tuned for our new integration. Maybe.
Yeah.
Very cool. Very cool.
All right.
I don't really have anything to add. I think I want to thank Adli for coming on, and
thank you for meeting me.
Really, yeah, it was a lot of fun. I always love talking stablecoins, and I really do think that Usual is one of those special projects that it could be the next decentralized tether. And look forward to working with you guys.
Thank you so much.
Yeah. Right. Thanks for coming, Adli. DeFi advisor, one last word, maybe?
Sorry, was muted. Just thanks a lot, Adli. It was very nice to meet you. I think you guys have a very interesting vision. Will be very interesting to see how a decentralized kind of tether or what's it called, circle can really build itself in the next few years. I think it's a very long-term vision kind of project, and in the most probably interesting field out there for many of us, which is stablecoins. And I salute and really hope you guys create something very, very interesting, and with your innovative models for the tokenomics and other stuff as well. So a lot of luck, and thanks for coming, man.
Thank you.
Thank you, guys.
Cool. Let's check if there's one last question. No, seems like we've been pretty clear. All right, guys. Thank you very much for coming to this broadcast, and have a good evening.
Yep.
Good evening.
Thank you,
Bye.
Cyril. Adli.
Bye.
Take care, DeFi advisor.